Warren Buffett is widely regarded as one of the most successful investors of all time. Over the course of his career, he has built a fortune of over $100 billion through his investment firm, Berkshire Hathaway. In this article, we will explore Buffett's investing strategy in detail and provide examples of how he has used it to achieve his remarkable success. Value investing. Buffett's investing strategy is based on the principles of value investing. This approach involves finding undervalued companies and buying them at a discount. Buffett believes that the market often overreacts to news, causing the prices of good companies to fall. He takes advantage of this by buying these companies at a discount and holding onto them for the long term. To determine the intrinsic value of a company, Buffett analyzes financial statements and other data to identify companies with a strong competitive advantage, a solid management team, and a history of consistent earnings growth. He looks for companies with a moat, which is a sustainable competitive advantage that makes it difficult for competitors to enter the market. One example of Buffett's use of value investing is his investment in Coca-Cola. In the late 1980s, Coca-Cola was facing competition from PepsiCo and was struggling to maintain its market share. However, Buffett saw the company's brand recognition and distribution network as valuable assets and invested heavily in the company. Over the years, Coca-Cola's stock price has risen significantly, and the company has continued to pay out dividends. Long-term investing. Buffett is also a proponent of long-term investing. He believes that investing is a long-term game and that short-term fluctuations in the market are irrelevant. Instead, he focuses on the long-term prospects of a company and invests accordingly. This allows him to avoid the temptation to buy and sell based on short-term market movements. One example of Buffett's long-term investing approach is his investment in American Express. In the early 1960s, American Express faced a scandal involving a subsidiary that had engaged in fraudulent activities. The company's stock price plummeted, and many investors sold their shares. However, Buffett saw the company's long-term potential and invested heavily in the company. Over the years, American Express has recovered from the scandal and has continued to grow, making it one of Buffett's most successful investments. Focus on quality. Buffett also has a strong focus on quality. He believes that it is better to invest in a few high-quality companies than to spread your money across many mediocre ones. By investing in quality companies, he can be confident that they will continue to perform well in the long term. To identify quality companies, Buffett looks for companies with a strong competitive advantage, a solid management team, and a history of consistent earnings growth. He also looks for companies with a moat that makes it difficult for competitors to enter the market. One example of Buffett's focus on quality is his investment in Apple. In 2016, Apple was facing increasing competition in the smartphone market and was struggling to maintain its dominance. However, Buffett saw the company's strong brand and loyal customer base as valuable assets and invested heavily in the company. Over the years, Apple's stock price has risen significantly, and the company has continued to innovate and introduce new products. Patience and discipline. Finally, Buffett is known for his patience and discipline. He does not let short-term market fluctuations or emotions affect his investment decisions. Instead, he takes a long-term approach and invests based on careful analysis and research. To maintain his discipline, Buffett sets strict criteria for the companies he invests in and does not deviate from them. This helps him avoid making rash decisions or investing in companies that do not meet his standards. One example of Buffett's patience and discipline is his investment in Wells Fargo. In the early 1990s, Wells Fargo was facing significant financial problems and was considered a risky investment by many. However, Buffett saw the company's potential and invested heavily in it. Over the years, Wells Fargo has become one of the largest banks in the United States and has continued to perform well, making it one of Buffett's most successful investments. Conclusion. In conclusion, Warren Buffett's investing strategy is based on the principles of value investing, long-term investing, a focus on quality, and patience and discipline. By investing in undervalued companies with a strong competitive advantage and a solid management team, he has been able to achieve remarkable success over the course of his career. By taking a long-term approach and focusing on the intrinsic value of a company, he has been able to avoid short-term market fluctuations and capitalize on opportunities that others may have missed. His patience and discipline have allowed him to maintain a consistent approach to investing and avoid making rash decisions. By studying Buffett's investing strategy and applying these principles to our own investment decisions, we can all hope to achieve similar success in the stock market.